going on, guys? Today we are going to be talking about MPW, or Medical Properties Trust. We're going to look at what's going on with this stock. We're going to look at some of the news, some of the headlines, more importantly, the actual reporting coming from the board of directors and stuff at MPW, because that's probably something we should look at. And why I think this actually might be poised to explode. Wall Street Bets guys, Diamond Handers, I'm looking for you to help us out with this. So this is a public call. If you are not looking to battle the hedgies, I think this is still a really good buy, even without the potential for some other bigger things to happen here. But we're going to dive into a couple things. Really, we're going to look at a company's financials, all right? This is a stock that is getting crushed. And honestly, I can understand why, but at the same point, I think it's just gone a little too far. So we're going to look at supporting data for that. And as always, I'm not a wealth manager, credit counselor, or financial advisor. I'm just a guy in a triangle-shaped room sharing my personal opinions and hoping it entertains you. So with that, we're going to dive into Seeking Alpha, and then we're going to jump into like some serious stuff here on why I think this stock could explode. All right, guys. So here we have Seeking Alpha. I've pulled up MPW, or Medical Properties Trust Incorporated. You can see here that it's currently $10.55 per share. Looking down here for the 1 year chart, we're down 47.3%. So, whoa, way down. Year to date, down 8.5%. So, yeah, it's pretty aggressive. 5 year chart looks like this. A lot of growth. They hit 2361. Then 2020 happened. Everything went down. I don't know how you have a company that owns hospitals. How does that sell off during a pandemic? That's mind-blowing to me. But they very quickly recouped, built that back. And let's go over some of the key figures to Medical Property Trust. So it's almost trading at its 52-week low. Even the other day, Friday, it closed out down 5.3%. So there's a lot of just crazy over-exaggerated movement on this. Dropping 50 cents a day, 60 cents a day, that's a lot. So FFO, these are the funds from operations. This is basically how much they're making, right? $1.65 per share. This is a realty investment trust. So they're going to pay out a large portion of that as a dividend, and their forward dividend rate is $1.16, giving it a current forward dividend yield of 11%. So massive dividends on this. They do pay quarterly. It's currently 29 cents per share per quarter. So that's what we're looking at there. Short interest. This is 17.47% shorted. That's a lot of short interest for something that as we dive into, I'm hoping that we get some interest here. But so for those who don't know what short is, it basically means someone's selling it now to buy it back later. They think it's going to drop, right? That's the easiest way I can describe it. They're expecting it to drop, and 17% of these shares are held by people who are buying them at a later date. They're expecting it to drop. So, if 17% of these are held in a way, or of these shares are held in a way that's expecting it to go down, there is potential for a short squeeze here. I don't think that that's going to necessarily happen with this, but just a lot of pessimism around MPW, and I will share some optimism with you to hopefully change that. And then market cap, we have at $6.3 billion. Remember that, okay? $6.3 billion is the market cap. But what is MPW? What is Medical Properties Trust, and what do they do? The easiest way to find this out, in my personal opinion, is to just go to their website. All right. So You can go to these companies' websites. When you buy a stock, you're buying a percentage of ownership of that company. So you think you would go to their website, right? And here's their homepage at the very heart of healthcare. So we'll pan down here. They have 444 properties, right? These are all medical properties. They have about 44,000 licensed beds in their hospitals and things. They're in 10 different countries, and they have 55 different clients that are leasing these hospitals and medical facilities from them. They have this little map here. They're out of Montgomery, Alabama. That's where they're headquartered, and then this is their homepage. So, not really that exciting here. I will show this though. These are some of their partners that they have. These are the people who they're leasing these hospitals to. So, kind of fun if you want to go on their website and look at all their different locations. There's 5 of them within about an hour of where I live, so that's kind of cool. Company, just as a whole, basically who they are. They're the second largest non-government owner of hospitals in the world. Okay, so MPW, it's not like this is some small fry company. They're the second largest non-government owner of hospitals in the world. I just want to read that again. They're basically using hospitals to grow a real estate portfolio. And they are preferred by most operators around the globe. That's most likely because, again, they're the second largest non-governmental owner of hospitals in the world, right? So their portfolio mix primarily in the United States. That's where they are based out of. However, they are growing internationally very, very quickly through a lot of expansion that's happening pretty rapidly. I mean, they were one of the first, or I think they were the first American real estate investment trust to buy a hospital outside of the U.S. They have something like that on here where, first U.S. company of its kind to invest in hospitals globally. Currently, $8 billion invested around the world. So they got $8 billion floating around outside the country, which is great. It's good because it's real estate too, so they've got that covered. So looking here, we have a $19.7 billion asset value. Okay, $19.7 billion of assets. Since 2018, their gross assets have grown from 10.1 billion to around it's moving towards 21 billion. So that's a lot of growth very, very quickly. 109% growth since 2018 is just stellar. But why is it down 50% if their assets have grown by 100% in the past 5 years? So we're going to look at the investor relations, and we're going to step through this timeline one item after one item. You know what I mean? We're going to look at this chronologically because that will help follow the story. And we're going to bounce back and forth between their announcements and the chart. So this is January 13th. All right. Now, one of the big things that's going on with Medical Properties Trust is they have a couple tenants who haven't been paying them. How a healthcare company or a hospital doesn't have money to pay their rent, especially now, it is just asinine to me. But I don't know, maybe they're hoping on bailouts or something like that. I'm not sure. But these are the reports following a lot of these lease takeovers, company sell-offs and stuff. And I understand that volatility with clients is not a great thing when we're talking about a company making money. But as long as they can bob and weave through these tough times, they will come out on top. And that is why, again, I want to follow the chronological order of the past couple months of what's going on at this company. So Medical Properties Trust announced that Pipeline Health will assume the existing terms of its Los Angeles hospital master lease. Lease rate and escalator is unchanged. We'll go into that. medical or MPT, Medical Properties Trust. They use that a lot, even though the stock ticker is MPW. They call themselves MPT. MPT will collect 100% of rent accrued during bankruptcy. Okay, and MPW is not or MPT is not going bankrupt. One of the hospitals is. MPT facilities and related capital additions vital to go forward operator strategy. All right. So one thing that we have here, right? Lease rates and escalators unchanged. They write leases to these massive companies or these huge medical companies, right? That own hospitals or urgent cares or emergency centers, whatever. In their leases, they write in rate escalators. So every year, that rate, their lease rate is increasing. So when you see that the lease rate escalator is unchanged, that's actually a good thing because it means that their rent will increase over time. But diving back in, Medical Properties Trust today announced that the assumption of its master lease of 4 Los Angeles area hospitals and 2 medical office buildings by Pipeline Health has been approved as part of Pipeline's successful confirmation of its plan of reorganization, which provides for Pipeline's exit from bankruptcy proceedings, the pre-bankruptcy lease rate, annual escalator, and remaining term of approximately 18 years, and other material lease provisions remain unchanged. So the lease rate and everything, it's staying how it was. That's pretty big news. The court-approved plan reconfirms the characterization of the master lease as a true operating lease rather than a financing agreement. All right? So they're actually leasing this property, which is great. Following the December sale of its Illinois hospitals, Pipeline is primarily focused on its post-bankruptcy plan on opportunities within the attractive Los Angeles footprint. On the effective date of the plan, blah, 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 they'll be paid. Oh, all right, so I shouldn't skip this. On the effective date of the plan, MPT will be paid all rent that accrued through the first half of January, and it has agreed to defer approximately $5.6 million or approximately 30% of the 2023 cash rent into 24 when it will be collected with interest. Guys, a lot of this stuff is court ordered, so they're going to make a little bit less money right now, but they will be paid that back in 24 with interest. Okay, so they are making more money. It's just going to take a little bit. All right. MPW and Pipeline also agreed to complete the Pipeline's pre-bankruptcy plans to add a behavioral facility within Coast Plaza Hospital. MPT will fund the capital addition, which will be joined to the master lease and earn rent at the lease rate upon completion. So what does that mean? Basically, Pipeline Healthcare, they have some Illinois hospitals. They're not doing well, okay? They're not making money. They're not doing well. They're trying to go bankrupt. They're trying to figure it all out. They say, let's ditch those Illinois hospitals. They're useless. We don't want them. We're not making money. We've got these places in LA. Let's put all our chips in one hand. Let's put all our eggs in a basket of LA because there's a lot of people in LA and there's a lot of stuff going on over there. So let's just focus on that. And we're going to need some time to pay you for the property because we're dealing with the Illinois thing. Medical Properties Trust says, great, that sounds awesome to us. That's cool. You're a good tenant. Get rid of, trim the fat, get rid of what's going on in Illinois. We'll see you in LA. Hey, here's this random hospital that you guys want to localize that portfolio. Great. Pay us. Awesome. Right? So that's good news and bad news. A lot of people are going to see this and they go, oh man, so now we got this company Pipeline. They're not going to pay us. They're deferring $5.6 million. Oh, $5.6 million. It's not that much money, guys. I understand it affects the cash flow. It very much does. I get it, right? The cash flow is $5.6 million light. Remember, this is a company with almost $20 billion of assets, okay? $20 billion of assets doesn't get crushed by $5.6 million, which they are getting paid back on deferment with interest, okay? So that's some pretty good stuff there. And this is an 18-year lease. So this is like, you kind of work with your client a little bit on an 18-year lease. Okay, so that's, I understand it. It makes sense. I don't think it's as bad news. To me, it looks like Pipeline is now more reliable because they've trimmed the fat in Illinois and they're able to work something out court appointed to make everything, sail smoothly. So bad news, technically, but good news, right? What happened on January 13th to this stock? Let's go to year to date. January. All right, so here was the 13th. It dropped down to 12.83, and then after that, it was like, oh, okay, cool. Like, there we go. So it went up to 13.78. Well, the next bit of news, February 15th, right? Medical Properties Trust announced an agreement for Common Spirit Health to acquire Steward's Utah operations and lease MPT's $1.2 billion Utah portfolio. This is a little bigger news than the 5.3 million that's getting deferred. Okay, this is 1.2 million. So, first question, who is Steward and what is their Utah lease? Okay, so about 6% of Medical Properties Trust's assets are in Utah, and they're leased by a company called Steward Healthcare. And Steward is not paying. Okay, they're not doing a good job of paying their rent. I don't know what's going on in Utah, but that's been the big news, right? That is, the whole Steward thing has been going on for like a year, and that's what takes us from, $21 a share to $10.55 a share. It's Steward. Steward's the big problem here. They're the big news that everyone keeps talking about, and it's bad. And, so we got to figure out the Steward Healthcare thing, okay? So this came out on the 15th. Medical Properties Trust announced today that it has agreed to lease its entire Utah hospital portfolio to Catholic Health Initiatives Colorado, also known as, I'm going to call it Chic, right? I like it, Chic. A wholly owned subsidiary of Common Spirit Health, subsequent to Chic's pending acquisition of the Utah hospital business currently operated by Steward Healthcare Systems, or Steward. Centra Health or Centura Health will manage the facilities for Chic. All right, so that is huge news. I don't know why it didn't just explode on this news, because that has really been the cause of most people's fear in this, is what's going to happen with these Utah hospitals. So expected transaction will further MPT's long-term efforts to improve portfolio diversification by property type, geography, and in this case, the operator. So they want to get Steward off of their portfolio a little bit, which makes sense. I would cut them out of my circle if they weren't paying me back for something they owed me for. The company's investment in its Utah real estate represents about 6% of its total gross assets. So yeah, I was just saying that. It's about 6%. And Steward's concentration will decline by this amount, which is great. You want to diversify your tenants a little bit. Accordingly, Common Spirit, recognized as one of the country's largest and most respected not-for-profit healthcare providers, so one of the biggest and best, will become one of MPT's largest tenants. I want the biggest and the best guy to be my biggest tenant, right? Would you rather, lease to McDonald's, or would you rather lease to, an independent taco shop? I love independent taco shops. I'd rather eat those, but I know where there's money, and the money's going to be better coming from McDonald's, right? It just is what it is. I wish I had tacos right now. Cash rental payments during the 15-year initial lease term are beginning at roughly 7.8% of MPT's gross investment and will increase by 3% annually. So there's a couple things here. One, they're paying cash. Great, right? Love cash. Two, 6% of their portfolio will now generate 7.8% of their gross, profit. That's great. So I love that. It means they're making more money off this than they probably should, which is great. And it's increasing by 3% annually, so they're covered for the future, and that also helps support dividend growth I'm a dividend growth investor, so that's why that kind of stuff really does excite me. The overall cash flow profile of the lease is particularly attractive given the tenant's strong investment grade credit. That's good. They have good credit. The lessee will have the option to purchase the facilities at the higher of fair market value or MPT's gross investment at 5, 10, and 15 years. So this is the part that I probably like the best, right? The person leasing it will have the option to basically buy medical properties trust out of their property for what they basically own it for, or if it's worth more, then they'll give them that. So really here, it gives them an out to just offload $1.2 billion if it doesn't work out, or it gives the company that's leasing from them the option to buy it out off of them. I like that a lot, because, if it's going well and they want to buy it, they can buy it. And that's great. It lowers some of the debt that the company has. The purchase of Chic's acquisition of the operations from Stewart was not disclosed by the parties. They didn't talk about how much they're paying Stewart to get the hospitals from him, but Stewart expects to use the proceeds to reduce debt, including early prepayment of loans extended by MPT in the second quarter of 2022 and some other liabilities. So that's pretty awesome. I love that. Here's some notes from the executives and stuff. That doesn't really matter. They're just saying, hey, this is a good choice. Of course, it's a good choice. You're doing it for a reason, or at least we have reason to believe it's a good choice. So that's good news, because that's really been the killer thing. The next day, February 16th, that article was February 15th. So this is February 16th. Birmingham, Alabama Medical Properties Trust today announced that its board of directors declared a quarterly cash dividend of 29 cents per share of common stock to be paid on April 13th. So that is not an increase to the dividend, but it's the same, right? So let's look at the dividend history here. These guys are kind of working on their way up to a dividend aristocrat. For those who don't know dividends, that means you paid or you've increased your dividend for a long time. So, they've increased their dividend every year for the past 10 years. That's definitely a focus of this company, a huge focus of this company. And it's not uncommon for them to start the year with the same dividend payout as the year previous and then bump it up like a penny, which is kind of my expectation for this year. I think that they'll probably bump it up a penny once they clean up this whole Stewart transaction. So we'll see when that happens. But no cut to their dividend. And that's a big thing. With all this moving around and all this stuff going on, they didn't cut their dividend, which is great news. For a lot of people holding real estate investment trusts, that's why we have them, is because of the dividend. That and the stock values are based on assets, which is also kind of nice, which we're going to get into that. And I think that'll make people go why is this so cheap? So that's their announcement. They declared their dividend would not be cut. It would be the same that it was last quarter. And we might still be on pace to increase that dividend later in the year. We'll see. So let's take a look at the value of the stock coming around the 15th. All right, yeah, so that's good news. 15th, it goes up. Look at the change. 13.79%, guys. That's how much it spiked on the 13th. If that's a reaction to the news, I don't know what is. But yeah, 13.79% spike. They announced the dividend would not get cut, but stay the same at least for this quarter. It came down just a tad, but it is what it is. And then let's see this next piece. The 23rd, earnings comes out, all right? And we're not going to rip through this whole earnings thing. That'd be crazy. It's long, all right? But their earnings report came out, and they lost money, I don't know why this was a surprise to anyone. I shouldn't say they lost money. They were less profitable. But they have been telling us this whole time that, like, hey guys, like, we're pushing off payments, we're going to defer stuff. Like, that means they're not going to get paid the income. But even with that said, right, look at the headline here: per share net loss of 24 cents, right? And that's a per share net loss of 24 cents, whatever. And normalized FFO of 43 cents in fourth quarter. All right. So FFO, that's your funds from operation. They use AFFO a lot, which is adjusted funds from operation. So we'll see that. But that means that their funds from operation that they received was 43 cents per share while paying a 29-cent dividend. So at least the funds from operation can actually still cover the dividend, and there's some safety net in there, which is good. Usually, again, being a realty investment trust, they're going to pay out a higher percentage of their funds from operation, like their rent payments and stuff. They're gonna pay out a higher chunk of that as a dividend. But this is what I like: 35% growth in net income and a 4% growth in both NFFO and AFFO. So like their adjusted, what's it called? Their adjusted funds from operation. Yeah. So I mean, they grew. That's really good. So they're making more income, and they're pulling in more funds per share. Like, that sounds pretty good to me, especially with all the chaos. So as we come down here, fourth quarter 22 net loss for the full year. Net income included a real estate impairment of approximately 171 million related to 4 properties leased by Prospect Medical Holdings in Pennsylvania, as well as a write-off of roughly 112 million in unbilled Prospect rent. Those were included in the funds for operation, but excluded from normalized results. That's NFFO. So they did write off some pretty big amounts of money, right? That's basically $300 million of rent that wasn't paid, which is just ridiculous. But they are making moves on that, which is good. But we'll see that down in a little bit. So in October, they commenced the development project to be leased to Ernest in South Carolina upon the completion for approximately $22 million. In December, they acquired 6 Priory behavioral health facilities, previous leased from a third-party owner in the UK for $233 million. And additional cash rent from CPI-based and fixed-based rent escalators of approximately $50 million is expected for 2023. So they're going to bump the rents $50 million on these people. They're buying stuff still. They're building stuff. All good signs. Previously announced activity. So this is them touching back on everything that they said before. But January announcements that Pipeline Health will assume the existing terms of Los Angeles Hospital's master lease and collect 100% of past due rent. They're getting all that rent money back. They're paying it forward. They're going to say, hey, we'll put it on hold and defer some of the money with interest. February repayment of MPT of $205 million loan investment in Springstone upon LifePoint Health's acquisition of majority interest in the operator. So they lent $205 million to a hospital, and they're getting paid back. So that's good. Agreed in February to lease the entire Utah hospital portfolio to a wholly owned subsidiary of Common Spirit Health, and taking over Stewart. That's, again, huge news. And then the February dividend. So we've already talked about all that. They're talking about inflation and rents and all that up here. We'll skip down. So this is kind of some interesting stuff that's not in the negative news, that's kind of gone untalked about. In December, MPT acquired 233 million euro for 6 of the largest, highest acuity, most profitable, and best known Priory inpatient behavioral health facility comprising of 374 beds in the vicinity of London, Manchester, Bristol in the UK. All right. That's a huge deal. They did finance 105 million of that, which they say is attractive seller financing. I don't know what that means. I don't, but they did borrow 105 of the 233 mil. And they're saying that that's going to be a huge cash cow for them. They have rent escalators in place, and it is a 20-year lease term, so that's pretty stable. So MPT plans to reallocate capital away from the real estate leased to Prospect. Those are the guys in Pennsylvania that owe like $170 million. Their previously announced sale, predominantly for cash, of its Connecticut hospitals this year, as well as exercising lease provisions entitling it to significant value embedded in Prospect's management care platform. In order for this to occur, 12 to 18 months is necessary to allow Prospect to recapitalize and prepare for its managed care business for the sale of recapitalization. All right, so they're going to give them like a year and a half. They're going to try to figure out the cash thing. They're going to sell us some stuff, wipe debt, whatever. Company has a total assets of $19.7 billion, including $13.4 billion of general acute care hospitals, $2.7 billion of behavioral health facilities, $1.4 billion of inpatient rehabilitation centers, and $0.3 billion of long-term acute care hospitals, $0.2 billion of freestanding emergency room and urgent care properties. They're all over the place. All right, so just kind of going over that, right? It's like, all right, this is the story. This is what's happening. This is the history. It looks like a normal stock that had less earnings this year, so it's going down. I don't understand why that's such a big deal. Well, there's a couple things, right? And plus, the other day, like the COO, Chief Operating Officer and Vice President, he did retire. It's not that he got booted or asked to leave or anything. He turned 68 and wanted to retire so he could spend time with his wife, his kids, and his grandkids. So that was in the news too. But how is it that earnings report basically tanked the stock around 15% in a matter of a couple days? I'm not quite sure. And we're going to look now at just the total valuation of the company, because a lot of this just doesn't make sense, right? They're making more money in income than they are paying out the dividend. And I know that the whole point of a stock is not to pay the dividend. The whole point of the company is to grow. But they have the money to grow while still paying the dividend out, and their assets just don't line up with the stock price. So we're going to dive back in and take a look at that. All right, so here we have the balance sheet of Medical Properties Trust, or MPW, right? Because I'm a lunatic, I actually like the newest on the left. I like to read them left to right, going most recent to in the past. So sorry about that if you guys don't like that, but that's how I read them. So when I look at their total real estate assets and I look at all their assets and everything like that, this is what they own. I'm just going to skip down to the bottom. Total assets. They currently have a total assets of $19.658 billion. That's their total assets. So 19,658,000. A lot of zeros. All right. So that's what the company is holding. That's what they're sitting on. That's their property, their cash, their investments, their security, all that stuff, right? Which is what it says on their website. Their liabilities, right? Let's look at their debts. So when you look at their long-term debt, accounts payable, unearned revenue, non-current, that stuff, their total liabilities are $11.0636 billion. All right? 11 minus 11,063 point. I shouldn't do that. 6,000. All right, add the zeros. So if you take their assets and you subtract their liabilities, that gives you a $8.594 billion common equity, right? There you go. You're basically right here. So this company has equity of $8.5 billion. So why are we trading at a market cap of $6.3 billion? If they shut this whole thing down today, right, and they sold off everything, they paid off all their debts, we'd make bank. Like, it just doesn't make sense. How do you have a stock that's trading so much lower than than where they're at. I mean, it just doesn't make sense to me. So, and when you look at the news and all the reporting on it, right? All this news, medical properties trust drops amid repeated short call from hedgy, right? REITs end lower for the third quarter. All of these reports or all these news articles are so negative on it. And then when you look on the left for all the analysis, buy, hold, buy, strong buy. It's so polarized. Um, what do they say? Buy the facts and sell the news or something like that. Like, it's crazy. Like, I've never seen the news say it's terrible, and then all the analytics are like, yeah, we should buy this. It's a good deal. But for that, not only do they have positive momentum right now with closing out some of their bad debt and changing their tenants around, like, that's not financial momentum, that's corporate momentum. They're moving in the right direction. They're making good management decisions and future proofing their company. Okay. Does that reflect in the earnings right now? No, it doesn't. When you say, hey, we're going to give you this so you can pay us back in the next couple things so you can settle out your bankruptcy, which doesn't affect us. And then when you have your liquid cash, you can pay us with interest. That does affect us. That just means, hey, we have a good tenant. We're going to make more money. So, and it hurts right now. Don't get me wrong. I get that. But at the end of the day, they still own all those hospitals. They can sell them. Like, they can sell off assets. It's crazy. What's that's like 30% gain just if the market cap was adjusted. Like, that's ridiculous. Let alone the fact that right now it's paying an 11% forward dividend yield. I mean, you could put this up against like Jeppy. Like Medical Properties Trust is paying out like it's Jeppy right now because it's got so far devalued off of like some bad news that it's not in the conversation with like Realty Income Corporation or any of the other ones that are paying like 4.5%. So yeah, I mean, how you can own a realty investment trust with massive upside potential where your forward dividend yield if purchased today would be 11%. Again, that's like QYLD, JEPI, JEPQ type numbers, and it's not a covered call fund. This is just a cash flowing hospital business. Like, I really don't understand what's going on here. It just doesn't make sense, which is why I buy it every day, right? I buy Medical Properties Trust every day, dollar cost averaged in every single day. You can see that on my channel. Do I own a ton of it? No, I don't. But I own enough of it that I'm starting to look at it, and I really think there's something here. So, if there's anybody on Reddit or Wall Street Bets that agrees, maybe I'm missing something. I don't think that I am. But this has been something that I've watched for like a year now. And I think we got something here. So, find somebody who's a financial advisor online. I'd love to have them in the comments. Like, I'd love to see people's comments and opinions of what's going on with this. Cause I think, again, I think it could be a short squeeze. So a short squeeze, you really only need about 10% of the stock to be shorted. This has 17.4%. And there are a lot of factors here that go into like, it should be 30% higher. The stock, it should at least be $14. It should be $14 a share just if we bought it at the value of equity in their assets, let alone the potential to make money, grow money, earn money, and all that. But just the cost of the assets are worth more than what the stock is priced at. So I don't understand. I really don't. I think this is a huge buy. I really do. Again, I'm not a wealth manager, financial advisor, none of that. But I think it's a huge buy. And I just don't know why people aren't talking about it. So I wanted to be the guy that talks about it. We don't do these videos a lot, but I do them from occasion to occasion. When I find something that's this good, I think it's worth talking about. But I do have a finance channel where I invest $50 every day into the stock market. So if that stuff interests you, you can find me here or like or subscribe or whatever. But really, more importantly, I'm looking for comments on your guys' opinions on Medical Properties Trust and where it's at right now and where it's going. Because to me, all signs point to up. All right. We do invest with Sofi on this channel. If you want to get into investing, I'll have a link down in the description where if you sign up, you get $25 of free stock for opening a new investing account with them and funding it with only $10 or more. So if you want to get into this stuff, that'll get you 2 free shares of Medical Properties Trust. But dividend payout coming soon. They take the snapshot, I think, on the 15th or something like that of March. What is that? Yeah, ex-dividend date. So if you own some MPW, they'll give you 29 cents per share for every share you've got on March 15th. So, yeah, with that, I would say roll the outro.